Do you think it could fall below the 50-day? And if it does, what do we do?
Well, I don't think it's a question of do I think or could it or woulda. I think it's just more about risk management. So, pull up my chart there, would you, Thomas? Yeah, so now what has happened is that we have a lot of new length that has been purchased in a very short period of time, which is kind of represented by this pink box, right? And you notice how that the 50-day moving average, which is our blue line, is acting as a level of support. That is usually a good sign in a market, and certainly we see the market has responded as well today. But this now also becomes a point of risk. In other words, some traders who, typically retail traders and even some institutional traders might have stops or might decide that they don't want to be in a position if price breaks below the 50-day moving average. Now, algorithms are well aware of this phenomena, and a lot of times what they do is they try to force the market below one of these values to what is called a liquidity trap and try to set off those stops. I mean, who hasn't had that happen to them? And the market reverses very quickly, which could have been what has happened today. But, the question I have is, how much of this new length is leverage, in other words, on margin, and how strong a conviction do our buy and dip traders have? Because if it doesn't hold the 50-day moving average, then we're going to get a change in character, and the change in character of trend. In other words, higher highs and higher lows is supportive of this buy the dip behavior. But if we break the 50-day moving average, then we're going to start making a lower high, and then below the 50-day would be a new lower low. So a weekly close below the 50-day moving average, I believe, could be that signal that could change the way, the behavior of the market. And that could create a liquidity sweep to the downside. In other words, a lot of this leveraged new length, would be liquidated. Now, if we do get that, well, then, for the S&P, for the SPY here, I think that brings in the 200-day moving average. I know that there's a little line here around 635, which is the 100-day moving average. But I think it'll bring the 200-day into play, which is around 605. And if you're looking on the S&P index itself, that would be around 65, 52-ish. And there's a little gap just below there around 64.75.